What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future. I'm also going to do some in-depth technical analysis and give you guys my price prediction for tomorrow based off what the charts are showing and based off what the data is suggesting. I'm also going to break down why tomorrow is going to be an absolutely massive day for the markets as CPI is coming out, and this will most definitely affect Tesla and the overall market and also the FOMC meeting going forward. Now, before I break anything down about why on earth tomorrow is going to be a big day, what my expectations are for CPI, how this may affect Tesla in the markets, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, taking none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends in 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. Tesla's down 6.27% for the day, taking a big hit. And this was kind of ironic because the overall market ended up actually pumping today after big banks like JP Morgan are actually very bullish for tomorrow and the next few weeks. All of a sudden, they just came out with the claims that they believe the market's going to pump up lower than expected inflation data. They believe that CPI is going to be a lot better. They believe the whole market's going to pump. And new data just came out that's suggesting that that is very possible, but there are some red flags as well. So I really want to talk about that and how that could affect Tesla. Tesla today was not looking the best whatsoever. We're showing lots of relative weakness. The market bounced. The market was green. As you guys could see, SPY was green. The VIX ended up popping up on the higher volatility. The memes were green. I mean, Apple ended up being green. The QQQ, so much green was in the markets. Even Google started pumping. We saw so much green, and yet Tesla took a big hit. And this has many things to do with, lots of rumors and speculation about Elon Musk's next moves, and also the fact that more sellers are still starting to come into Tesla because they're very worried about some more big red flags. Now, what's good about Tesla, however, is this stock could be very capricious. This stock could sometimes do unexpected things. And one thing I noticed is that we actually closed almost exactly where we were before Tesla got a big bounce the next day. So notice this candle right over here. You will notice that Tesla was on this big sell-off from this 200 level. Tesla came crashing down, right? And then we had this very bearish looking candle. People maybe would have thought that Tesla was about to tank. Tesla was going to crash to 130. Instead, what happened was Tesla closed at 167.8 around here. And then what happened was we bounced. Actually, we came down to 166. Then we bounced and we saw Tesla close above 170 before another uptrend continued. And we've been respecting this support level for quite a bit of time. This time we actually failed to actually hold it. Instead, we actually broke down again. So now it's looking like, okay, support is not holding us up. So what is likely to happen? There are two possibilities, in my opinion. Now, history could repeat itself in a way, and maybe tomorrow Tesla comes down to 166. The buyers come in, the bulls step in, they start buying Tesla like crazy, and this thing gets a big bounce and starts pushing up. I also believe that the odds of buyers coming in or not is going to be very dependent on CPI too. But if you are a mega bear and you believe that the bears are just going to take over, the shorts are going to destroy Tesla, its share price, then you could argue that we may not even hold 166. Maybe the bulls are not strong enough, and Tesla breaks all the way down to new lows for the year, slowly declining to the lower 160s. That's also very possible. Now, what is more likely to happen? I believe it will depend on the market. If the market bounces, there's an increased probability that more of the buyers will step in these ranges for Tesla. But if the whole market collapses tomorrow, just hypothetically, right? I'm just hypothetically speaking, there's an increased chance and we won't get as many buyers down here, and this demand zone won't really hold Tesla up. It could go either way, and that's why I want to talk about CPI first before I break down what the charts are likely telling us. So CPI is coming out tomorrow at 8:30 a.m. Eastern time. It's going to happen right before the market opens. So if you didn't buy your options for playing CPI, I mean, you don't really have time to do that unless you somehow have a way to play during the pre-market. I mean, for the most part, a lot of people did end up like buying last minute options because they are prepared for anything. And one way to do it would be to just hedge by buying both calls and puts. I mean, it really is your own choices, but like I said before, tomorrow's going to be big, and I do believe the market's going to make a very volatile move. So CPI is coming out. You also have to remember that it's heavily dictated by energy prices, and the energy data just came out, and we have some good signs out there. So looking at the US all grades, all formulations retail gas prices per gallon on average in the USA for the month of October, which was the last, this was like the last CPI reading. It was for the month of October. The one that's coming out tomorrow is going to be for the month of November. Basically, at that time, the average gas price was about $3.94 a gallon. That's very interesting to see. And then if you look at November, the average price was about $3.80. That's about a 13 to 14 cents decline per gallon of gas. That's a pretty good sign for CPI. So energy could end up coming down. Now for core, that's a lot less predictable. However, we do have some red flags out there. That's going to be the PPI report. So PPI came out. This is the producer price index. And PPI and CPI, they tend to be correlated in a way where they are lagging indicators of one another, but they tend to not be exactly the same. I actually did an analysis of this, and I found, I'm going to show you guys that in a couple of minutes. I found that the overall PPI report tends to be a good indicator of what CPI will do. However, the core PPI is actually not the best to figure out core CPI. So core CPI is a lot more difficult to actually predict, but the overall CPI isn't as hard once you see the data. So you have to remember PPI came out, the forecast was 7.2%. We ended up getting 7.4%, but the market didn't crash extremely hard because 7.4% is still significantly lower than the last report at 8%. So it's a sign that inflation is still cooling off month over month, but year over year, it was still a little bit higher than before. So what does this mean for the data? Well, the first thing you have to remember is when doing an analysis, you have to look at expectations. And that's what I'm going to talk about just real quick in this video. So the expectations for CPI right here are about 7.3%. So the market is expecting inflation to start taking a big hit and start coming down pretty hard. Remember, if it does come down very hard and we actually meet expectations or we're below expectations, the market could actually start to pump. And then that's an increased chance of us seeing CPI causing the Fed to give us a 50 basis point rate hike and being less hawkish. They could even give us a less hawkish outlook for 2023. That's also going to be very important, but we have to wait and see. So for core CPI, it's expected to be about, sorry, right here, it's expected to be about 6.1%. So I'm really hoping that we get something like that. Hopefully it's below that 6.3% that we got the previous month. Anything around that or below it will be a good sign for the markets. However, the data suggests that it's very hard to predict this. I'm going to show you that in a couple of seconds. So what I essentially did is I did an analysis of the collective PPI report relative to expectations compared to that of the CPI data. And historically, what typically happens is CPI comes out first and then PPI follows it. And when you see the data, they tend to have a correlation. About 80% of the time, they end up in the same direction. I'm going to show you exactly how. So remember, for January 2022, PPI was actually lower than expected by 0.1%, and then CPI was as expected. So they were only like off by 0.1% overall, and they were actually pretty close for January. Then for February, both of them were higher than expected. We got the same results. For March, both were as expected. Both were higher for April, higher for May. They were a little bit different for June. PPI was lowered by just like 0.1%. CPI was actually higher by 0.3%, which means that there are some instances where they are different. So they're not always going to be exactly the same, but they do have a tendency of being very similar because July, both of them were high. August, both of them were low. September, they were a little bit different. And then for October, both of them were higher than expected. For November, both of them were lower than expected. Why am I saying all this? My point is PPI tends to be similar to CPI overall. And for December, it was actually a little bit higher than expected by 0.2% overall. Now, considering the fact that gas prices did end up actually dropping, that's actually giving me an increased probability that we're going to see the lower end of this spectrum. On average, the difference is about 0.23%. All right. This means that it's very likely that CPI is going to be lower than expected, or like lower than what we saw month over month. And it's most likely going to be between 0 to 0.4% higher than expected year over year. This means that looking at the data, hold on, right here, we're most likely, it's very likely that CPI is going to be somewhere between 7.3 to 7.7%. However, when I was looking at the gas data, seeing that coming down, I decided to use the lower end of the spectrum to give you guys my prediction, which is between 0 to 0.2% above expectations. So my prediction for the overall CPI is about uh 7.3 to 7.5% overall. And even though, like, yeah, I mean, it's maybe it could be a little higher, completely fine. What's good about it is it's still showing a clear sign, excuse me, of a decline, because remember, it was 9% in June and July. We were getting 8%, then the sevens, and now we should get around 7.5 to 7.3% overall. Now, even though CPI is important, core CPI is what tends to be even more pivotal for the markets, or just as pivotal. And that's going to be very hard to predict, because I was looking at the data and core PPI is just not a great determiner of it. There are many months where they're very similar, core CPI and core PPI. There are many months where they're very different, such as like March and April, May and June, but then July and then September, they were actually very similar, August too. And they were actually pretty similar in November, but different in October. They're similar about 60% of the time. Now, considering that core PPI was higher by 0.3%, core CPI comes out on Tuesday, the average difference is about 0.4% or 0.35%. This suggests that core CPI will most likely be either below expectations by 0.1% or higher by 0.6%. And if you take the lower end of that spectrum, it's most likely going to be either a tiny bit lower than expectations or a tiny bit higher. That's what this analysis is suggesting when you use this model. So what this tells me is core, hold on, core CPI is right here. This is most likely going to be either 6% flat or 6.3%, which is the same as the last month. Like I said, it's very hard to predict, but if it is very close to the forecast, which is what my data is suggesting, it could actually help the markets pump just a little bit. So there are more indicators now suggesting that overall inflation is going to be a little bit better than there are suggesting it's going to be worse. All right, that's the bottom line. I really apologize if that was like giving you a headache, if that was like too complicated, if I was talking too much about it. But what does this now mean for the markets? What does this tell us about the charts? So I had mentioned something very strange that was going on SPY. It was very tricky. If you guys were watching the charts last week, what essentially happened was we had this big drop down here. Institutions were buying down here, right? The market pumped up and it started like pushing up like this. So many of us thought, okay, maybe this is where institutions would start unloading. The market started dropping again. And then we were like, okay, I don't know if the market's going to just start crashing from this point, because the VIX and many things were suggesting that's very possible. Or if we are supposed to pump, it's going to be heavily dictated by CPI and the FOMC meetings, right? It could go either way. And what's happening now is the VIX looks very strange. The VIX has this giant gap down here and also has another gap down here, which makes me think, okay, is the VIX going to start coming down and the market's about to pump one last time before the big crash ends up happening? Because I'm still net bearish on this market, guys. The market, in my opinion, is still going to come down to the lows in the future going into 2023. But before that happens, could we pump one last time? We're going to find out tomorrow and on Wednesday, depending on what the Fed ends up saying. So please be ready. So if you're bullish in this market, all right, you could argue that, okay, institutions were buying down here, they're going to keep pumping us up. And then JP Morgan was saying inflation is going to be lower than expected, so we should pump, right? I don't really know if that's going to happen. If the market comes down, SPY is going to retest 391 and come down pretty hard if CPI data is really bad, right? If it's much higher than expected. But, but my data suggested it's most likely going to be very close to expectations, if not maybe a little bit lower. So there's a good chance this could actually cause us to push up just a little bit. And we could see SPY hit 402. And if we keep pumping thanks to FOMC, if Jerome Powell and the Fed end up pumping the markets, hypothetically, we could retest this trend line, which was the previous support of the ascending wedge on SPY. If we retest it, we could see SPY even go for this like gap fill zone. See how SPY had this gap that it formed here? Maybe we actually go for the gap fill first before anything happens. And could we even continue to pump after that? It is also possible, but I'm going to be very, very cautious until we actually see it. So please be ready, because what institutions want to do is if they do want to pump the markets, they want all of us to load onto calls, turn super, super bullish. And once that happens, even if they cause this thing to break 410, for instance, what they're going to do is they're going to let that happen. If they let that happen, they're going to get everyone to turn bullish, and then they're going to reverse and cause the market to crash when people least expect it. That's their plan if this market is going to turn bullish, because we saw so many indicators out there suggesting that the market is not necessarily done with the drops. Another bear rally will come, in my opinion. I just don't know if it's going to happen like starting this week or within the next 2 weeks, but eventually it should come. If it doesn't come yet, there is potential for SPY to push up now. After what JP Morgan said, after what the data is telling us about gas prices, and also it depends on CPI and other factors. I think seeing how the market's starting to pump and seeing the data, it seems a little bit more likely we either stay flat or maybe push up a little bit. So I'm going to be very cautious, but you have to watch the data first. For the VIX, where's my VIX chart? I mentioned to everyone we have this big gap here, and this gapped up because volatility really increased. If this thing ends up coming down, okay, if the VIX starts going down to fill this gap, there's a good chance the market could still pump a couple more times, maybe a few more days worth of pumping, maybe until next week or two before the big drop starts and the VIX starts pushing up again. That's also very, very likely. So please be very careful here. Finally, I want to talk about the QQQ, which is actually in a pretty decent state right now because Apple got a nice bounce. QQQ actually pushed up very, very nicely. We actually retested resistance around this 285 zone. If this thing continues to pump, watch 287. This 287.96, break above that, and this thing has more potential to keep going. This is going to be also heavily dependent on Tesla and also Apple. At least Apple's going to be the bigger one to really move this. Apple looks pretty decent so far. It is starting to respect an uptrend. Could you argue that this was supposed to form kind of like a head and shoulders like formation and come down? You could technically argue that, but it really depends on the data. So technical analysis is not the biggest thing that works. I'm thinking that if Apple keeps pumping, okay, we have to break 145.64, break above that, and we have this chop zone right here up until like the mid 146 range. Break above that, and 150 is still possible. However, I'm still going to be very cautious and I won't make any calls until the market ends up giving us the data. This could also come down, retest 142, right? Break below that, then the 140 zone is also very possible. It depends heavily on the data. The data does seem a little bit more likely to cause us to pump though, so I'm going to be very cautious. Now, anyways, the last thing I want to talk about would be Tesla. What's going on with Tesla? All right. The problem with Tesla is there's a lot of relative weakness. Lots of buyers are starting to capitulate, but it's not the end of the world. All right. It's not the end of the world. Tesla could still bounce, and that's what this thing has to do if there's any chance of Tesla not to make new lows just yet. If the market pumps very hard tomorrow, and if Tesla is going to see like a defensive bounce, we have this nice gap around 180. So it is possible for Tesla to push up over the next week if it gets that bounce. I can't really make the call because it's going to depend on the data and etc. I do think a bounce is a little bit more likely, but I'm not promising it. I'm not going to promise it because if Tesla breaks below 166, not going to be good, right? This candle technically, from a technical standpoint, does not look good. But this same thing happened right here and Tesla ended up bouncing, right? Right here, look at this candle. It's almost identical to this one. In fact, the bottom of that candle is almost exactly where the one is right now. So I'm thinking that Tesla's either going to bounce from right here and start retesting this upper trend line, maybe retest the 180 zone over the next few days, or this thing just breaks below 166 and it starts crashing. In my opinion, it's going to depend heavily on the buyers and also on the CPI report. So please watch that very carefully. I'm not some kind of Nostradamus fortune teller. I don't know exactly what CPI is going to be. Some indicators are suggesting it's more likely to cause the market to pump. So that's a good sign for Tesla to potentially bounce right here. So I do predict that's more likely Tesla to bounce around 166 to 167 and then start pumping. If that's not the case, all right, if Tesla keeps showing the relative weakness and it does not see buyers come in, this thing is going to make new lows. All right, it's going to start crashing to the low 160s and then maybe even see the 150s. So it has to bounce tomorrow. It has to bounce as soon as it can for any hope of this stock to start pushing, at least temporarily. Anyways, that's what I have for this video, guys. Get ready for tomorrow. I apologize if I have been talking for way too long, but please be ready, remain calm, cool, and collected, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still very bright. I'm still super bullish long-term, and I'll see you guys in the next one. Thank you, and peace out.